Hey there! Are you considering dipping your toes into the world of investing in the stock market, but feel a little intimidated by the process? No worries, we're here to help. In this beginner's guide, we'll be breaking down the basics of investing in the stock market, from how to get started to what to consider when choosing stocks. So, let's get started. First things first, what is the stock market? Simply put, it's a place where publicly traded companies sell ownership shares to investors. When you buy a stock, you're essentially becoming a shareholder in that company. And when the company does well, so does your investment. Sounds pretty straightforward, right? But here's where it gets a little more complicated. The stock market is constantly fluctuating, which means the value of your stocks can go up or down based on a variety of factors. This can be intimidating for new investors, but it's important to remember that investing in the stock market is a long-term game. It's not uncommon for stocks to experience ups and downs, but over time, the market tends to trend upwards. So, how do you get started investing in the stock market? There are a few different options to consider. One option is to open a brokerage account, which allows you to buy and sell stocks online. Many brokerage firms offer a variety of investment options, including individual stocks, mutual funds, and exchange-traded funds. It's important to do your research and choose a reputable brokerage firm that aligns with your investment goals and risk tolerance. Another option is to invest in a robo-advisor, which is essentially an online investment platform that uses algorithms to create and manage a diversified portfolio for you. Robo-advisors can be a great option for beginners, as they offer a more hands-off approach to investing. Now, let's talk about choosing stocks. When it comes to selecting individual stocks, there are a few key factors to consider. One is the company's financial health. This includes things like its revenue, earnings, and debt levels. You'll want to look for companies that are financially stable and have a track record of consistent growth. Another factor to consider is the company's industry. Some industries are more volatile than others, so it's important to do your research and understand the potential risks and rewards associated with each industry. Finally, it's important to diversify your portfolio. This means investing in a variety of stocks across different industries and sectors. Diversification helps to mitigate risk, as it spreads your investment across multiple companies rather than putting all your eggs in one basket. So there you have it, a beginner's guide to investing in the stock market. It can be intimidating at first, but with a little research and a long-term mindset, you can confidently start building your portfolio and reaching your financial goals. Happy